everyone. Today we have to cover Bitcoin. As you guys can see, we're back at 87K and we're doing fairly decent. You know, we're kind of moving sideways a little bit here in Bitcoin, but we are still under the microscope. We're still in the fire here. So I'm going to talk about where I think this is going to head. Remember, I'm not a financial advisor. None of this is financial advice, but let's hop straight into this, guys. So we're at 87.4K. And this is a pretty critical area right now. And big shout out to the members of the channel. Before we start, I want to shout out all the members. There's been a lot of different requests from different members. We got an Avantis request, Aster, and XRP just covered Humanity for one of the members. Big shout out to you. And then also another member wanted to know what I think would happen for Humanity for 2026, and I think it's going to be the same thing for all of the cryptos, so that's why I'm going to include it in this Bitcoin video. So I think every single crypto is probably going to do pretty bad for most of 2026 until the end of 2026, and that's because we have actually been in a bull market for a very long time. There's always 4-year cycles in crypto, and we have been in a bull market since January 1st, 2023. If you come all the way back here, you can see we've been going crazy actually. Like you can see the shift that actually happened the second January 1st came. It actually shifted into the bull market, and I think it's going to be the same thing, but the opposite. It'll shift into a bear market going into next year. So you can see right here, December 31st, 2022, it was red, and then as soon as January 1st hit, boom, starts going crazy. And I think it might be the complete opposite now. And you can look, the percent R trend exhaustion at that point completely bottomed out and it crossed right there, and then we got the buy signal. Not the buy signal, let me not say that. This is the percent R trend exhaustion, by the way. It's not a buy signal, it's a reversal signal. It shows the reversal of trends, right? When we have this, we see the reversal to the upside. When we have this, we see the reversal to the downside. When it's going to continue to be bullish but have a temporary pullback, you'll see the white line, which is the short-term trend, come all the way down. The blue line, which is the long-term trend, come a quarter of the way down. And you'll see that long-term trend staying bullish pretty much until we have the next bear market or the next major crash, right? The next major crash that happened here was around August of 2023. And it wasn't a major crash, but it was a pretty big pullback, to say the least. It was a pretty big pullback, right? And that was when things really started to kind of get crazy, because this was the first structure that we built leading up to where we are now, right? The first structure. So you can see here on 2023, we have this trend line here starting on January. No, January 1st is over here. Okay, I knew something was wrong. But September of 2023, you see that we started the trend line, you know, the uptrend, right? And we've been in there since then on this trend line right here. So we see that. But the first bullish structure that we started was around March 2024. And all the way to October 2024, we actually had a bull flag. Bull flags are bullish, obviously. And then the second bullish structure we had was a falling wedge. This falling wedge was around January 1st, 2025, all the way up to April 2025. This is when Trump pretty much crashed the market by saying he's going to apply pressure on China and everybody else. And then we had the third structure, which put the nail into the coffin. This is called a bearish expanding triangle. Sorry, I almost said bullish. A bearish expanding triangle. This is what a bearish expanding triangle looks like. You know, it's like a crocodile mouth, or you can say Pac-Man, whatever. Yes, I just cracked my wrist. But anyways, this is pretty much what we call a bearish expanding triangle. It's a very bearish pattern here, and we've seen a lot of those inside this cycle for different altcoins. And this put the nail in the coffin. So I discovered this bearish expanding triangle right about I think we were at this point, but at this point, I thought everything was going to be good because it's a bearish expanding triangle, yes, but I thought at least we could go through it all the way through it before it's done. Right up here at this Fibonacci at 158K, I thought that we could actually top out at 158K for this cycle. So yeah, I was wrong there. I thought we would have kept going with the, but it is a bearish expanding triangle. So it's definitely expected that it would drop. Like you can't expect it to go all the way through the pattern all the time, right? Like these other ones, like they stopped at this point. They didn't keep going. And I just thought, hey, maybe we could continue to go up, but we didn't do that. But now this is where we are at now. And I'm pretty much talking about this because I want everyone to know like how I do my technical analysis. I'm very much pattern oriented on my technical analysis, very much pattern oriented. And I also like to use Fibonacci's. So I'm really always paying attention to these patterns. And that's how I do it. I always show these charts here. And the next pattern that we have forming is a rising wedge. We actually just now had a rising wedge, but you can see it looks a little bit different because before I had it like this because, this is what it was looking like before. And then we broke down out of there. And then I just kind of restructured it just now because I looked at it and I'm like, wait, we're still in a rising wedge. So we're still in a bearish pattern. Still in a bearish pattern. Remember, rising wedges are bearish. So be extremely, extremely careful here. Now, this is coming straight from TradingView. They have like an education sector where they actually talk about where the community talks about different trading patterns. And the real success rate of the rising wedge in trading is actually 81% in bull markets. But yes, we're in a bull market technically, but we kind of just entered a bear market. So right now is grounds for bear market territory. And I think we are entering into a bear market. So in a bull market, it's going to go down 81% of the time, right? Rising wedges are bearish 81% of the time in a bull market, right? But the breakout direction for a bear market, if it's bearish, it breaks out bearish 60% of the time. And then you can see here in a bull market, 81% of the time, remember that. But after a downtrend, like how we just had, only a 51% success rate, average decline of 9%. So what they're pretty much saying here is if this rising wedge completes its process and it does go down, it only has a 51% chance of going down. Not only does it only have a 51% chance of going down, but the average decline is also only going to be 9%. So when you think about it, the other 49% chance is that it goes up. So there's a slightly higher chance that it goes down rather than going up. So right now it's 50-50. It's 50-50 right now. And this is coming directly from TradingView. When you break things down and you look at it contextually, when you look at it and you really think about it, fundamentally, this is a 50-50 chance right now, right? This is a bearish pattern, but it could take off right now. It has a 49% chance of taking off and going up, has a 51% chance of going down. So it's almost 50-50, slightly leaning more bearish. And we're also in a rising wedge, which is a bearish pattern. So it's slightly more bearish. And if it is bearish, on average, a 9% drawdown. So what would that look like? Well, that would look like us going down to pretty much this level here at 80K. I was talking about a double bottom. And let me actually make this look better. We got to go from the top so far of this rising wedge, which is right here, all the way down to here. So if the average one is 9%, we could stop here on average at that support. It just so happens to be at the support we've established at 85K. Or we could come all the way down here to this 15% area, which is 80K, which would constitute a double bottom. And I've been talking about the double bottom scenario a lot. And it would be a temporary pump. It would be a temporary pump until we come up and get rejected, either before we even get back up here, or let's say if we get up to 109K to get rejected, right? So I think either way we would have a rejection if it were a double top. So if we did something like this, I still believe there's going to be a rejection and it'll continue downwards, eventually continuing down. So all in all, it's still bearish all in all. So I'm really not worried for anything right now. It's all a waiting game at this point. Still, remember, it's 50-50. It could go up right now and it could do well, right? Or it could go down and do well. Like you got to think about it. If it's a 51% success rate, you have like 2% chance, 2% more of a chance for it to go down than going up. So it's really it's a 1% chance, but let's just say 2. But anyways, that's pretty much what we're looking at right here with Bitcoin. Now, as it comes to the as it pertains to these indicators here, the percent R trend exhaustion, this is the daily chart. Still have the short-term trend coming down here, long-term trend kind of doing the same thing. I think that they're gonna cross eventually here, and there's going to be an uptrend. So there is going to be a short-term relief rally uptrend probably, and that's why I'm looking at the because like if it comes down a little more and then it crosses, that coincides perfectly with my thesis of a double bottom like this. It would be a double bottom, and that pretty much confirms the thesis there that it's a double bottom. Now it doesn't have to be a double bottom, obviously, but we can make these assumptions based off of recurring patterns, and that's pretty much what trading is literally making assumptions based off of recurring patterns. So when dumbasses inside the comment are like, when dumbasses inside the comment section, they're like, oh, he got this wrong, he got that wrong. Of course I got it wrong. Of course. Congratulations, you have slightly higher IQ than someone with a double-digit IQ. Congratulations. But anyways, what we want to see here inside of the charts is this pulling back a little bit, like I said, and then coming back up, because that would be a double bottom, right? And if it's a double bottom, I still believe that we're in a bear market. But at that point, I don't know when it's going to get rejected. Me personally, I think if it does, it's really going to trick people. It's going to bull trap people completely. I think if we have a double bottom, we do something like this, and then we immediately come up here, we inch our way up after coming up, doing like a huge pump, and maybe we trade sideways, and then we get up to 109K, and then people think we're really going to take off, we're going to break out, and then boom, we dump. And the reason why I say 109K, that was the top of the previous rally here. So 109K is very significant. That was also major support. I think that will be a major level for Bitcoin and major confluence. We'll definitely see a bit of a crash probably. If we hit 109K, it'd probably be a bear trap or a bull trap, because it's trapping the bulls. And this is a pattern here, or this is the candlestick patterns, the reversal chart patterns. This is the double bottom. It's a bullish pattern. But remember, I'm not bullish for 2026. I'm bearish. I'm super bearish. But right now, I think in the short term, it would probably be smarter to think we'll do the double bottom scenario, because there's been so much pain in the market. People are waiting. They're itching for opportunity to throw their money in. And when this happens, it's going to pump. And then the whales, they're going to see this as an opportunity to get out clean. They're going to be getting out. Their whales are probably loading some up right now. I'm not going to lie. Whales are probably loading up. They're probably waiting for a relief rally, get up to 109K or so. Major dump. So that's probably what they're waiting for. I would say give or take January or February. My thesis not last year, but my thesis for this bull market in 2026 was pretty much that. No, not bull market. My thesis for the end of the bull market of 2025 was that we go through this bearish expanding triangle. We go all the way through it, all the way up to 158K by February. Obviously, that's not happening. But the reason why I'm mentioning that is because the same thing could happen, but we could be bearish by February. So let's say we have a relief rally and a double bottom. Right now, I'm thinking if we do this, we go up, everything looks good. In January, people like, oh, we had the Santa Claus rally. We had the New Year's rally. People sold coming into the New Year's for tax loss harvesting. I think that's what it's called. Tax loss harvesting. People did that. And now they're putting their money back in January. Then stuff starts to go up. And then this is where the bull trap happens. They trick people. People think that we're going to continue to go up. Really, that was a relief rally, but we're going to have more pain. And that's kind of how I see us going into next year for January in 2026. So anyways, big shout out to the members. Big shout out to the members of the channel. Go ahead and become a member of the channel, guys. It's only $9.99, and it helps out a lot. And you can have me literally go over anything for you, as long as it's not some type of low cap scam coin. I'll do a technical analysis on a crypto, stock, forex, whatever. I can really do a technical analysis on anything. And just to kind of show you guys what I'm doing, I'm trading Meta right now, and I kind of have the same strategy that I'm showing you guys, and I'm actually doing all right on Meta. I have lost a little bit of money, but I've recently inside of Tesla. Let's say Tesla is crazy. Let's not talk about Tesla. Tesla is doing crazy stuff right now, right? I got out at the wrong time, but now I'm in Meta right now, and I'm pretty much doing a option here for calls. I got in right here at this. So I have this percentage here. I'm trying to ride this up to $746. I don't know if it'll make it up there. It might not. But I'm doing options. I'm waiting a stop loss right here. If it goes below this point, stop loss, it'll sell it. If not, I continue to let this grow. If it goes up to here to 717, then I'll open up another stop loss here at the previous high of this point, which is 678. So the new stop loss would be 678. If it keeps going, another stop loss here. And then I'm pretty much trying to get out up here with my call options, and give or take, it'd be like a 68% gain for the call option. I've already done the math, so I'd have to look at it. But that's the play I'm doing right now. And there's a not high, but there is a likelihood that it's not going to actually go all the way up there. So that's why I'm doing the stop loss. So when you guys see me talking about trading, remember you have to have proper risk management. If you don't have proper risk management, trading is not going to work for you. So that's why I'm mentioning this. I don't want people to think I'm just buying and holding stuff. Like, I'm not doing that. You don't just buy and hold stuff. You enter with a plan. You have your stop loss. You start making gains. You make a new stop loss. You make more gains. It pulls back. You make a new stop loss. It goes before there. You're taking profit and you're still up, right? But if it doesn't and it bounces off that level and it continues up, cool. Now you got a new stop loss. And when it comes down, and it tries to retest, make a new stop loss, and then if it doesn't break past that, boom, your stop loss hits. Or your take profit at that point, it's called take profit. It's the stop loss all the way down here. But it's the second you get in profit and then you start setting new ones, now you're take profit. That's your take profit one here, take profit here, take profit here, take profit here, stop loss all the way down here, lose nothing, right? That's pretty much my philosophy there for the trading. So I just kind of wanted to show you guys. And that's why I say, become a member of the channel. It's only $9.99 per month. Have me do a technical analysis on anything. Currently, we're going through a bullish expanding triangle on Meta, and that's what made me take this trade currently, and I'm doing pretty well on it. So this is and like I said, I trade with reversal chart patterns, candlestick patterns, any type of patterns. I love patterns, chart patterns, wedge patterns, triangle patterns. I love those patterns. So I'm always doing some type of pattern trading. And we already covered Bitcoin. We're going to get back to Bitcoin. But just looking at here in Tesla, this is the percent R trend exhaustion. It doesn't get any more textbook than this. Whenever it becomes oversold like this and starts working its way up, typically it's going to make its whole way up there. It's going to take the whole ride to the top. It usually always does this when it comes from an oversold area. All these blue lines I'm drawing are instances when this has happened. Sometimes when it doesn't necessarily recover immediately because it has to become fully oversold, and then it did. And then sometimes it'll trade at the bottom for longer than expected. So you always have to, have a contingency plan, which just looks like a stop loss and a take profit. As simple as that. But the percent R trend exhaustion for Meta is moving up on the long-term trend, which is the blue line. And then the white line, which is the short-term trend, is coming down. I'm watching this trend here because as this comes down, this comes up. Long-term trend, these hit, these cross, and then continue their way up, possibly. But if it continues its way down, then that's when I take either my profits or my loss. And right now it'd be a stop loss at this point. But anyways, that's just what I'm doing here on Meta. And then when you look at the weekly chart, nice pattern forming up here. Should have another breakout, just like the previous one, hopefully. So that's what I'm waiting for on that. And like I said, it'd be a 50% trade. And for me, or 68% trade. For me, that would be $4,000 with the amount I'm trading. So that's pretty much what we're looking at here. And then we have the MACD. We're seeing that whenever you see the lightly red shaded candlesticks, is indicating that buyers are stepping in, as you can see here. And we will eventually have that reversal to the buying pressure. And this coincides exactly what I'm talking about with Bitcoin, which is exactly why I'm talking about this. Because when you think about it, Bitcoin stock market, they kind of move in confluence a little bit, not necessarily, not 100%, but a little bit. So if they're moving in synchrony and they're literally heading upwards together, I think that the stock market will do good the first half of next year. January, we'll probably see some good moves upwards, but I think after that, we're going to start seeing the dumps coming in. And once it starts dumping, crypto will start dumping as well. And I'm looking to get out of this option before it starts dumping, just trying to make a quick buck before we enter the bear market. And then I'll start looking at puts instead of calls. But coming back to Bitcoin, what does this have to do with Bitcoin? Well, when you look at Bitcoin here, we actually see that we're forming a little bit of a reversal. And you can see that because there's a very lightly blue shaded area here. This is an oversold reversal, very lightly blue shaded. You can barely see it. It's right in here in this area that I'm drawing. You can barely see it, but it's forming. And you can see the percent R trend exhaustion is curving. It's getting ready to have a recovery upwards. That's why I'm getting so getting into it right now. Now, does it have to reverse upwards like that? No. It could do something like this, go up a little bit, and then continue down even further. And that's kind of what I'm hoping for. So again, going up like this and then continuing down further. And that's exactly what is building right here. And that is why I think going into next year, January is going to be good. But after that, no, it's going to be the same exact thing, or it's looking like it's going to be the same exact thing. So that's pretty much the plan here that I have with Bitcoin. So you guys have seen a breakdown today of Bitcoin and Meta. And then I can show you the S&P 500 SPY is actually creating new all-time highs. Not only is the S&P 500 creating new all-time highs, it's about to break this resistance at 689. So this is a very significant resistance for the SPY, the S&P 500, and it's actually actively breaking it. And I thought it was going to be a double top, which is a bearish pattern. Like I said, I love patterns. I'm a pattern trader. A bearish double top would have been bearish, but that is not the case. We are pushing actively upwards. And not only are we pushing upwards actively, and I know this video is getting long, which is actually a good thing. I'm putting a lot more value in this video. That's why I preferred covering overall topics. I feel like I can give a lot more value that way. But we have been in an ascending channel since 2018. Let me say that again. We have been in an ascending channel since 2018. Why am I mentioning that we have been in an ascending channel since 2018? Because we're probably not breaking out anytime soon. Now, the last time we had an extended ascending channel was none other than a 2008 crash. When we seen that crash in 2008, going into 2009, we were in an ascending channel from 2009 all the way to pretty much the end of 2017. So from 2009 to 2017, we were inside of an ascending channel. So that is a very long time. From 2009 to 2017, we had 8 years inside of an ascending channel there. Right now, we've only been in since 2019. It's 2025. So we've been in here for about 6 years, going on 6 years now. So we got 2 more years until we've done the same thing as last time. I don't think it'll be 100% the same, but I also don't think we're just going to break out of this anytime soon. So what I think is actually about to happen on the SPY S&P 500, we're going to see this inching up here, pushing up to 700, pull back down to here to 653, and then possibly trying to come up and then continuing downwards, right? So going into the New Year's, and this goes exactly hand in hand with my theory for Bitcoin, and this is why I'm talking about it. I feel like we're going to come up here into January, do nicely, and go up to like $703 or somewhere around $700, get rejected, come down here to this support, try to do a recovery, get rejected again right here, because that's a support here, micro support, micro resistance. And like I said, I love support and resistance lines. They work all the time. So most of the time. So I think something like that could happen. So if we did something like this, we would come down and we would continue downwards, touch the end of this. When does that happen? Right towards the end of 2026. Like I was mentioning, towards the end of 2026, we're probably more than likely going to become bullish in all markets, from the stock market to the crypto market. So when we see that, we bottom out here at the bottom of this trend line on this ascending channel, around $599, well, around $600 to about $560. So 570 really. So that's what I'm looking at on there. And then when you look at the percent R trend exhaustion on the weekly chart, and I know it's an information overload, but you got to get that longer attention span. Stop watching TikTok. No, I'm playing. But look, right now, the short-term trend is continuing to increase. We are overbought here on the weekly chart. And once it gets here, What happens? It pulls back. When does that happen? Towards the end of January 2026. Just like I was saying, the beginning of January should be good. So that's what we're looking at right here. And that kind of ties into everything else. And the member of the channel, shout out to you again, big shout out to you. He was mentioning that, what do you think is going to happen overall in the market for 2026? That's pretty much what I think. And it was on a humanity video, and someone else asked for humanity, and I did that video. But since it was on a humanity video, I'm guessing that you probably want to hear about humanity as well. Hope you watched all the way through the whole video to get this info. But humanity, at this point, I'm expecting a pullback on this project. I'm expecting a pullback here. The % trend exhaustion is showing. The short-term trend is breaking out in the long-term trend. But again, it might continue upwards because remember, January might be good. So we actually might see it push a little higher, but I wouldn't count on it. This is a very new project. I think new projects are not going to do too well inside of January. And also look at the % trend exhaustion. Like I mentioned in my video from yesterday, the long-term trend's going sideways, short-term trend's coming down here. Eventually, short-term trend's going to come back up, meet the long-term trend. Real question is, when it does, what is it going to do? Is it going to continue down or is it going to continue upwards? I don't know that part. But what I do know is since the long-term trend's going sideways, short-term trend has to come back up. So a short-term increase here inside of humanity is a possibility. Also on the MACD, we are seeing the same exact thing, switching into buying pressure. So I think that this project could possibly go up a little bit and then pull back from there. I don't know. Honestly, I'm going to be honest, I don't know. But there is going to be a temporary push up. But after that, I don't know what's going to happen. I would say it would get rejected around 19 cents. And I didn't even have to look at it to know, but I just have a hunch for it because of this candlestick stops right here at 19 cents. So I was like, why did that candlestick stop at 19 cents at the top of the wick here, the green one? Well, it did that probably because of this. And I didn't have to look at it to know that. It's just, kind of like second nature to me. But when you look back here, you're like, oh, that makes sense. There's a lot of resistance areas at that area. That's why that candlestick stopped at that particular area, because they always do that. The top of the wicks for the candlesticks usually stop at that area. So that's, and it almost touched it here. So that's, just a little bit of a hunch right there. But I think that humanity is probably not going to do good, right? I don't think it's going to do. I don't think the project is going to do good in 2026. And I think this is just a temporary recovery. Let's say it keeps going up. There's a possibility it could have a double top and then crash. So there's a possibility of a double top, and it's a possibility that it could continue upwards. So we really don't know. But anyways, big shout out to you guys. Big shout out to the members. Hit the like button, subscribe. Remember, I'm not a financial advisor. None of this is financial advice. Leave a comment in the comment section. Let me know what you guys think about this. And the next videos for today, we're going to be covering Aster, Avantis, XRP. And there's one more video that I don't have down yet. So if any of the members of the channel watched this video all the way through, because I like to do 5 videos when I do them. I know I haven't been consistent lately, but I've been busy. But there's one more video because there's the Bitcoin and then there's the 3 I just mentioned and now one more. So if you have one more idea for me, guys, and you want me to cover something, members only, obviously, then I'll go ahead and cover them for you. If it's not Aster, Avantis, or XRP, because I'm going to be covering those, and I just covered humanity. So shout out to you guys. And as always, I'll be back with another video.